Live trading room, 9:31 a.m., 7/1/2014. Prices are trading up, continue to trade up. 59.25 mark to the market after the preferred entry at 58.25 is found. Could take that off the board right now at 50.25, people, 50.25, and lock that in. 50.25, 59.25, 59.25, 59, 58.75, 59.25 was the target. Now price is trading back down. Now traders, if prices find the 58.25 or possibly even a tick below that as the support level and hold that number where the market's just open, it is highly probable that prices can continue to trade to the upside. Flash fills, prices moved up quickly. If they sustain at or near this level, there is a good chance that prices can get into much higher territory today. We do know that on a 15-minute chart, we have 1957, 75, 1960, right? Which is at this point 59.75 right here. 1960 is the highest high within this market. Once again, still time to lock in the gain that is made between the entry and the 59, requote 59.75 price. Now prices are back down. Now once again, traders, if prices hold the 58.25 level right here, where resistance becomes support, it is possible that they can trade up. If they get through this by more than a half a point to the downside, that would be a clear indication that prices may not move up any further right after market opening, and you'd be out of this trade. Copy that. Jacob money flow is marginally back down since market opening. MACD is clear. SMI is back down. Long-term Jacob money flow, as we said, is back down, but MFI is way up. Clear. To be remain long, people. EMAs are good, and prices are so far stabilized after the breakout to the upside. And now moving up again. And this is what we were looking for. Price is now back up. $58.75. 59. Mark to the market. 59 traders. 9:35 a.m., 7/1/2014, E-mini trade in progress. Longer-term holders, you're clear to remain long. 59 on the high, 59.25. Looking to get higher, 59.75. On a target, possibly 59.60. Remember, people, 60 is the absolute high within this market. 60 is drawn all the way back from the high of June 24th. So once you get through 60, just a quarter of a point above, you're in blue skies. Now you have a profit you can take off the table right now, traders. If they're getting in at 58.25, you're at 59.25. That's the whole point. That's not a bad profit. Trading up into brand new highs, right? That's it, a point. You can take that and get out, be done with it, lock it in. This is the most difficult trading that exists. That we've done it. We identified this. We're identifying it out to grab a point right now. Longer term holders, you are clear to remain long. But the open risk increases as the volume decreases, right? Waiting for the additional confirmation of more volume to come in to propel the prices up and get through 60 into brand new blue skies. And now prices back down. After the recommended out with a point gain. Volume is dried up. EMAs are clear. Short-term money flow is clear. SMI is clear. MACD clear. Checking money flow is clear. Long-term holders, you're still good. You're still good. I'll get this NMFI into another screen. Watching both. Remember, traders, we talked about early this morning getting in and getting out, locking in that profit based on the market environment. And look what's happened since we reached 59.25 after getting in at 58.25 on the best fill possible. Some of you had lemon orders in and got that fill and got out at 59.25. That's a quick point. So for this morning's demonstration, right now I'll cut the tape on the recording and leave it to suffice that we recommended it in at 58.25. Prices hit a target at 59.25, so it was an early morning profit based on the profile of the market this morning. It's 9:28 a.m. Eastern Standard, 7/1/2014. This is Jeff Killian for the Inside Technician, signing off on the live trading room. People, you are viewing history in the making right now. Contract sizing that's coming in with still 30 seconds left in the bar can push the U.S. markets into brand new territory and keep them there. Our methodology in our live trading room, now at 9:50 a.m. Eastern Standard, has identified with, and we are back in here at this point based on a fill at 1960 and 25. And looking for prices to keep moving to the upside, or it will be a blow off. It's one or the other. The volume that came in should push prices up much higher. If this is in fact 18,510 contracts, sheer accumulation, people. And if not, then it will be a blow off. Across the board here, we are good. $19.61 and holding. $19.61. $60.75. Once again, the contract sizing that came in here. 18,510 lots. appeared to be nothing but accumulation at that time. It either is accumulation or it is a blow off to the upside. We'll let this play itself out. This will happen soon enough. Across the board, the money flow indicators, short and long-term institutional trackers are clear to be long. Everything across the board is clear. Prices hold 60.25 or 60. There is a possibility it can continue to trade to the upside. Money flow indicators are clear to remain long. Long-term holders, you're good. Long-term holders, you are still good. Holding at 60.50. Four minutes and 40 seconds left within the current 15-minute bar. $60.25. 60.25. $60.50. $60.25. $60. Holding at 60. Now at this point, we'd be looking for more volume to come in, even a tap for 8,000 to get off the floor at 60 to continue to move the prices to the upside. I don't believe that this volume spike, even at this time, is associated with the blow-off. I believe that it was accumulation that came in for the big run-up, and we have a retracement looking for somewhere around 50% the size of the big bar up, right, at around this point, which is a tick below the preferred end at 60.25, getting through 60 to find support and then continue to move to the upside from MFI is strong to the upside at an 88.76 value. Chicken money flow is back up above the trend line to the upside. $958.71 2014. $60.75 back up, $60.75. $60.75. 1 minute left within the current 15-minute bar. $60.75, $60.50. $15 seconds left within the current 15-minute bar to close out. We're at a juncture here, people, between the close and the new open, which is down now, on a shakeout to the downside. So there would be no need, if this continues as is, other than the shakeout to the downside, to stay in this trade. Current configurations that are an absolute change here on the chicken money flow are still positive to be long. The MFI is positive to be long. Price is now moving back up to 60 and 50. 60 and 50, we do have the volume that's come in here. Not for the count that we needed. 66, 69, now rising. Yeah, now we're getting closer to the number I'm personally looking for if prices are going to continue to move to the upside and get through here and get in the new blue skies here and stay there. I was looking for 10,000 contracts traded long. I mean, outside of this, across the board, long-term holders are more than clear to stay long. We're good. 61 and moving up. No nosy neighbors. 61 right now after 60.25 is a 0.75 profit. And we're moving up on another test on the current 1 minute bar's high. 61 mark to the market, people. So one more excellent representation of our methodology that is identified with another high probability trade here on this bar at 951 to be long. Get in, take the retracement to the downside, and then go ahead and stay in the trade. Because we knew that at this time this bar was accumulation based on everything that we were looking at. Possibilities of getting out with a few points here and locking it in. Things are starting to turn back around, right? You can either get out if prices get back up or here. That's the test for right now, and things are off. That's it. Done. So in the event that you're a long-term holder, now you're down quarter of a point, possibilities of a half a point. Prices trade through this to the downside. You have the money flow that's off. In this case, chicken money flow is marginally off with a trendline violation back to the downside. And the money flow indicator as well is marginally off at this point, has lost momentum. So this is the reason why it would be advisable to be out of this trade at this point, obviously. More than obvious now where prices are turning right back around. So locking in a quick profit here, either right out here or dealing with the drawdown and getting back out at around this level before prices have a chance to turn right back around and take it back. One more demonstration of a real-time trade here recorded at 10:03. We're going to cut it on 7/1/2014. Trading into new highs here, and once again getting through this, all traders in this trading room. Can I get a raise of hands of anyone who's taken any of these trades today, longer-term holders, especially on this most recent trade, that are making money? Bill, good for you. Chris, Timmy, I knew you'd be in there. Good for you guys. A lot of traders. You're viewing history. Our methodology has identified as fast as we can update the charts and keep going here to log the information in. We're getting into new highs back to back. Long here, out, long here, out here, long here, and prices keep going up and up and up and up with no end in sight. Unbelievable. 61.25. Yeah, it was 60.25. It's a typo. Price is trading now 63 and 50, 63 and 75. For those of you who are long-term holders that got in, how about here at 61.25? If you're talking 63.75, 63.50, or 64, get out, take the profit, book it, be done with it. It's more than enough. Don't get greedy. We have identified with a series, a multitude of highly profitable trades today. Your accumulated points are high. Don't get greedy. I don't expect that the market would continue to trade up much higher at this point. Copy that. Chris Shaw got 3 points in increments of half a point. Good for you, my man. Who was Richard that talked about earlier? Richard Codd. How about 62, 63? I just talked about that, didn't I? Get out. Good eye. Okay, once again, we're going to cut the tape. This is an extended video runtime, but we had to show this and how we identified with 3 different trades based on our methodology. We're going to end it all at 10:14 a.m. on 7/1/2014. This is Jeff Killian, a Chief Market Strategist for the Inside Technician, recording history in real time. The U.S. market's trading into brand new blue sky territory. Brad Logan is up on the next shift, which runs from 10:30 to 2:30 p.m. Eastern Standard. Expert trader, technical analyst, and administrator for the live trading room's secondary session today. I have full confidence in him, and anything that's worth trading, he will find and he will trade it, and you'll be right there with him.